Now, of course, everyone will be thinking, when assessing their biggest asset, quite likely their home. Because, as we're told today, the Commonwealth Bank has released modelling showing house prices could fall by almost a third by the end of 2022 under a prolonged economic slump as it braces for a sharp rise in soured loans caused by COVID-19. The chief executive of the bank, Matt Common, also cautioned the outlook was highly uncertain and the housing market would be strongly influenced by the level of unemployment and various other things. Now, when we talk real estate, I like to go to the experts, which is why we always find Peter O'Malley from Harris Partners, an agency in inner Sydney. I'm delighted to say that Peter's on the line. How are you, mate?
Oh, good. Thanks, Luke. How are you?
I'm well. Good to chat to you. Gee, when you see this and the idea that house prices could fall by almost a third, once you picked yourself up from the floor, what did you make of what they were saying?
It's a live option. It could happen, Luke. Let's hope it doesn't. And it's very important to recognise that the CBA are not saying this is a forecast. It's one of three scenarios that they've put forward. And they are talking about prices taking a massive hit if unemployment stays high. And given the level of debt that's in the housing market, that's highly conceivable.
So what does that mean for... I mean, is that like the dominoes falling over? I'm just trying to... That's a third... Sorry, mate, that's a third of the value. If I mean, God, you don't want to be in that situation ever, do you, surely?
No, that's right. And look, it's a pessimistic scenario, and they have outlined that. They've said if the economy was to shrink 7.1% this year and 0.8% in 2021, before a 2.3% rise in 2022, over this period, their modelling shows that house prices falling by 32%. And that's probably just a testament to the fact that as a society, we've run house prices up so high with so much debt, Luke. And if people are found find themselves unemployed with massive amounts of debt, there will be mass panic selling going on in the market. But interestingly, none of that is happening at the moment.
Right. Now, that's the key. So what are you finding out there?
The market is surprisingly resilient at the moment, Luke. The mortgage holiday that has been afforded to homeowners that are suffering COVID distress has seen absolutely zero panic selling in the market at the moment. I must say that stock on market is very low, so we're not seeing as many transactions as we normally do, but the lack of stock is actually inadvertently creating strength in the marketplace, and we're having many sales that are buyer competitive, and I know that many other agents in the industry are also experiencing the same.
Right, we've got hardly anyone coming to the country. We've got our own people returning. So that must hit, I guess, foreign buyers to some extent, does it?
Foreign buyers are pretty skinny on the ground at the moment. There's no doubt about that, Luke. And the rental market is not really appealing. That has crashed. That's down 20% in terms of price.
Wow.
So there's no investors on the ground at the moment. So these are owner-occupier buyers who are confident about the future. They're looking at record low mortgage rates, and they see now with property prices coming off their peak and mortgage rates falling at the same time, they see this as a good opportunity to get into the market.
Have you ever seen a market in this country, or at least it might have happened some time ago and you're aware of it, fall by, and again going back to the worst scenario, anything like 20 or 30%? And what does that look like on the ground? I mean, I'm assuming we've got people requiring either emergency housing or rental housing. They can't afford their current digs, so they've got to put it up for sale, but there's a massive oversupply. Is that what it would look like?
Yeah, look, I think the best example that everyone could relate to, Luke, is what's gone on in Perth. The Perth property market is down over 20% from its peak in 2014. So it's dropped over 20% in 5 or 6 years.
Yeah.
It's a combination of oversupply, a weak rental market, weak employment, weak confidence, weak population, all of the above. So Perth is still operating. And it's really important to keep in mind that the media have understandably zeroed in on this figure of 32% from the CBA modelling, but it is their worst case modelling in saying that. But the other thing I think that's also important to point out is this modelling doesn't factor in a second wave of COVID and it doesn't factor in a trade war with China.
Jeez.
And we've already seen the moves by China in the last few days that could have absolutely catastrophic effects on the Australian economy, which would very quickly flow through to the housing market.
Wow. I know that the CBA's rivals, the National Bank, they had a scenario that assumed a fall of about 30%, but Westpac did some work as well. I think their best case scenario was something like a 15% slide. So is there anything on the other side of the Commonwealth Bank projections, is there anything that suggests, in fact, prices might remain steady?
Look, once the mortgage holiday ends, I can't see that prices will remain steady myself.
Jeez.
When you're talking about Westpac's view there that property prices could come off 15%, it's important to recognise that we're probably already halfway through that, Luke. So most agents would concede the property prices are down 5 to 10%.
Right.
So if the fall stops at 15%, most people could live with that given the seriousness of the pandemic.
Yeah.
But we're not really, and this is what I'd say to anyone that's considering selling a property at the moment, is we're not really operating in a real environment because the mortgage holiday has enabled those that would otherwise be in distress to hide, if you like, and try and recalibrate their affairs before that mortgage holiday ends. And I think the banks, in all of this commentary that's coming out from the banks, they too are casting an eye to the end of the mortgage holiday, saying, what does the market look like then?
Fascinating. Mate, always a good chat. Really appreciate it. I value the expertise very much. Thank you, Peter.
My pleasure. Thanks, Luke.
Great stuff. Peter O'Malley, Harris Partners.
Hi, it's Brendan Knottle from the Salvation Army here. This is a heartbreaking, overwhelming crisis, and today, as every day, the Salvos are doing what we can to help people experiencing their own personal disaster. In the midst of turmoil, you can help those hardest hit. Whether they're ill, have lost their job and facing poverty, or simply lonely, you can give practical help and hope. Go to salvationarmy.org.au to give to the Red Shield Appeal now, and please help us leave no one in need.